All right, it's time to look at gold. I've got enough evidence now to determine whether or not this was going to be a grinding bottom to the ICL or whether we would get a bloodbath phase. My last video, we had just broken below that 1850 support. I had noted in a previous video that when price a support level or a resistance level gets tested multiple times, it usually breaks. So the expectation was that eventually 1850 was going to break. And but at the time I didn't know whether it would result in a break and a bounce and just a back and forth whipsawing move down into a final ICL, or whether it would unleash a selling panic, aka the bloodbath phase. At this point, I think we can, it's obvious that we're getting the bloodbath phase. So basically, there was a lot of stops building up underneath this 1850, and then when it broke, those stops triggered. So we started to get a selling panic on the initial break, and then it continued the next day when there was no rebound. That took gold down to to a couple of support zones here. One was the 200-day moving average, and also this $1,800 support level, if you remember. Actually, I can widen the chart and show you. All right, so we've got this triple top here when the bull market was topping, and that was a strong resistance zone, and this is right at about 1800, and that's of course where we were at just the other day, was that support zone there. All right, so moving back to the daily chart. So in a bloodbath phase, you've just got panic selling. So this major support zone didn't really stop anything, and all it did actually was, once that broke, it just triggered some more stops, and you get more selling. So at this point, gold is approaching this midpoint consolidation zone. And this is where I expect the bottom is going to occur. It's somewhere in this consolidation zone. These bloodbath phases, they tend to last 5 to 7 days. That's about how long it takes for everyone to panic and sell, and then you run out of sellers. I checked the sentiment levels on Friday, and we're still not really showing any extreme panic. There's still about 52% bulls. I would really like to see sentiment get below that before I try and call a bottom. So my expectation is we probably still have a little bit more selling to go. Another 1 to 3 days would be my guess, and we're probably going to come down into this midpoint consolidation before we get our final bottom. But I think we're within 1 to 3 days of the final bottom. Now, that being said, let me get rid of these annotations. We've broken 3 really important support zones. As you noticed on the board there, I had those. The 1923, that was the topping. 2011 broke through that. Then we of course broke this support at 1850, and then we broke 1800. So we've done a lot of technical damage with this ICL. So I have my doubts as to whether or not we're going to get a V-shaped rocket shot out of this bottom. Stocks tend to V out of bottoms. Gold, more often than not, doesn't. This was kind of the exception right here, but most of the time you get a grinding phase after the bottom occurs. So that's kind of what I'm expecting is probably going to happen. If we get a little bit more selling next week, we may have to endure 3 to 5 weeks of grinding down here. Maybe we get our bottom, maybe we bounce and price gets rejected at this 1800 level, or maybe if we can get through that, it gets rejected at this 1850 level, which would now be resistance, and we come back down, we got to retest these lows again. So for the people that are looking for this ICL and they're going to buy call options expecting price to just take off to the upside, I'm going to give you a warning here. If you're going to buy call options, you need to buy a lot of time. You need to be out to June or even September of next year would be much better, because you may have to weather uh, 3, 4, 5 weeks of chopping around going nowhere before we start to get some upside momentum. And I think we will get some upside momentum. We're going to break through this resistance at some point. We're going to break back through the 1923 resistance, and we're going to break out above this high. But it may take a little while for that momentum to develop, especially if I'm correct and we're in the second stage of a bubble in the stock market. A lot of capital is just going to be flooding into the stock market, where the easy money is going to be at here, um, over the next several months. So as the stock market bubble gets more mature and price gets stretched further and further from the long-term mean, you'll get more profit taking. Smart money will start to scale out of their stock market positions, and they'll start looking for undervalued assets. And that, of course, will be gold. It'll be commodities in general. But gold has been leading the commodity bull. So there's going to be money coming into gold as we get more and more mature in that stock market bubble. And at some point, that money will evolve into momentum in the metals sector. But we may have to, and I think it's very likely, we're probably going to have to endure 3 to 5 weeks of choppiness even after we get that bottom. So, if you're buying call options thinking that once we get the bottom, we're going to go straight up, I think you're probably going to be disappointed, and you're probably going to lose money unless you buy a lot of time. You've got to have a lot of time on those leveraged positions to weather what I think is probably going to be some choppiness through December and maybe the first half of January before we can break through this 1850 resistance zone and really start to get some momentum moving higher in the metals market.